Greetings, folks. You've reached DC Investing. I've reached financial independence, and I'm talking about topics that might help others on their journey to reaching financial independence. Today's topic is on a particular company that paid to me about $1,000 in August. It was a quarterly dividend distribution, and this company will pay just over $4,000 this year to me. It's a dividend distribution, so I do not have to do any more work myself in order to gain the funds that this company is paying. All the work that I did came in the past when I bought the shares of this company. So that's one of the nice things about being on the pathway to FIRE, which is financial independence, retire early, is that once you have worked to acquire shares in a company, then you kind of just sit back and collect the dividends, the passive income, and the income will come year after year, whether you do anything or not. So this company, in order to get this dividend, I own 4,458 shares of this stock, and that is an approximate dollar value of $80,600. So quite an amount to have to have generated in the first place to have that amount. Now, it actually, I didn't spend $80,000 on these shares because I bought them a few years ago, most of them. So I started buying, well, the company, I guess I better tell you, is Antero Midstream. The ticker for that one is AM. It is midstream, means it's a pipeline company. It moves energy back and forth. And it is the pipeline company for another company called Antero Resources. That ticker is AR. So AR is what's known as a upstream company. They're the ones who actually drill for the energy, pull it out of the ground. And AM is a midstream company that moves the energy to where it's needed. So I bought the shares of AM. I started buying in 2020. At that time, the energy market had really been hit quite a bit. Picked some up. I was just kind of testing out to see, do I like Antero Midstream? I decided I did, so I bought more in 2021, 2022. Then I kind of stopped purchasing it in my individual account and started purchasing it in my retirement account. And that's kind of where I hold some of the shares now. Excuse me. I know those costs are loud, but I just do have to do it. So anyhow, so I own, okay, so I did not spend $80,000 on the shares, even though that's the value. In my individual account, my shares are up about 140%. And in my retirement account, they're up about 60%, I think. So I only paid about half as much for the shares of Antero Midstream in order to have that $80,000 worth, which I think is just great. Now, one of the strange things about how Antero shows up in my accounts, and I think I'll pass this on as useful information to you if you happen to purchase this, is some of the dividends that Antero Midstream pays have come not as qualified dividends, but they've come in as non-dividend distributions. Another way to think about that is return on capital. But it's not quite the same as some of the other companies that I do return on capital for. So I own these through Fidelity, and what Fidelity has done is through a portion of the dividends that has come in as what they call non-dividend distributions, you still get the income from there, but it doesn't count on your taxes in the year that you receive it. What it does is it reduces the basis, your cost basis for the shares. So I think this is just great, because what it means is I have not had to pay taxes on a portion of the dividend yet. And that's great because I have a somewhat higher income, and it would push me into a higher tax bracket potentially by getting all the distributions or dividends paid out to me this year. I've still received the money, but what it's done is it has reduced the cost basis in my shares. So I learned about this because I purchased Antero Midstream in both my brokerage account and my retirement account, and I was looking back on the same day I made a purchase, and in my brokerage account, it said I got a much lower price than I did for my retirement account. I thought, what in the world? I checked the charts, and sure enough, it did not trade that low in my normal account. So I was like, how could it? Why would it show that I have these? Why is the share price, my purchase price, lower? And what I learned is, eventually, what's happened is, because I've gotten non-dividend distribution, Fidelity has automatically lowered the basis price for my shares. And so when I sell my stock, that's when I will pay the taxes on these distributions. So I think it's just great. They automatically take care of the non-dividend distribution. It lowered my basis. And so for those shares that I bought in 2020 and 2021, if I look back at the history on some of those, it shows that I have like 400% gain on one of them, 300% gain on several of them. And part of that is due because I've received dividends for 5 years from Antero Midstream to this company. And so not only has the share price appreciated, but because I got great dividends over this past while, it's basically moved my purchase price down. So that's something to kind of know. There's not a lot of companies that pay non-dividend distribution, but Antero Midstream has done that. It's been just great. I love the distributions and how they get paid. So it's been a grower over the past year. So I've received not only good dividends, but I've also received great share price appreciation. And in the investor presentation for Antero Midstream, they kind of show their average CAGR, which is compound annual growth rate. They say since they were founded in 2014, they've grown at I can't remember if it was 17% or 18% year on year. So they've grown quite a bit. Their return on the share price, as well as they've also paid out really nice distributions and dividends. So the dividend yield, it's just about 5%. I think it's just under 5%. So it's a nice dividend yielding company if you are so inclined to take a look at it. Let's see, I've got some other notes here on it. So they have reinvested the income that they get. Not only do they pay out distributions, but they also have paid down some of their debt this past year. I think they paid $170 million, paid down their debt over this last year. They also repurchased shares. They repurchased about $83 million worth of shares. Now, that's important because they would have been paying dividends out on that $83 million. And so by repurchasing them, then they don't have to pay the distributions out anymore on those shares. So it can make the income go up that 5% per year because they've retired those shares. So those are some useful things to know about that. Yeah, so what Antero Resources does, no, not Antero Resources, Antero Midstream. They're a midstream company, pipeline company. Where they're located primarily, their place of operation is Ohio and West Virginia. And those are some fracking zones. And the Antero Resources has drilled to retrieve natural gas from the ground. There's some oil that comes out too. And then Antero Midstream is the pipeline system that moves it. So when the energy comes out of the ground, it's kind of a mixture of all kinds of different chemicals. And so Antero Midstream has to, they have to separate the liquids because some of them, there is some oil that's in there. I think there's some benzene and ethylene and natural gas liquids. So they have to separate the liquids into different components. And then they have to, before they move it, they have to compress the gases or the liquids so that it will actually move through the pipeline. So part of Antero Midstream is compression, part of it is pipelines, part of it is separation. And then they move it off into a couple different places. I think part of it goes to the East Coast where there's a NGL facility, and then the other part of it moves down to the Gulf of America where they put it on another terminal and ship it out as liquid natural gas. They also sell it to power plants and use it here in America as well. But those are kind of the main places that this energy goes. And this is very important energy infrastructure that we have to have in our country. And it's probably going to continue throughout the world. People need energy, and any energy that gets pulled out of the ground is going to get used somewhere for something, whether it's turned into chemicals or combusted to make electricity. It gets used someplace, and it's a highly valuable substance. There is the need for electricity for AI data centers, as well as, to power our homes. And the AI data center thing is a really unsure thing, exactly how much energy will be needed. But the thought right now is it's the new thing, and we need every bit of natural gas we can possibly get to supply the hyperscalers with the energy they need to figure out how to create AI. So there's a little bit of information. Check out Antero Midstream. It's a fairly high dividend payer. It pays 5% now. When I started acquiring, it was much higher. It was closer to 10%. So that's kind of one of the things that works for dividends over the long haul is hopefully the share price in the company that you buy goes up, as well as you get a higher dividend. So Antero, I believe, has raised their dividend over the time that I have owned them, but I have got a higher share price today than I did when I purchased them. And it's kind of the best of both worlds. So that's the ideal type of situation you want in a dividend payer, that your share price grows in value and your dividend pays out solid and somewhat increases over time. So this has been a real winner for me. I kind of shifted. I haven't bought a lot of Antero Midstream over the past while, partially because it grew so much that I was kind of afraid that it was going to fall back anytime. So I just kept my shares. I didn't sell anymore, harvested the dividend. And then I kind of focused on some other midstream companies that were master limited partnerships, because they had even higher dividend distributions, but they haven't grown as much. So Antero is one of the stars in my portfolio. I really have liked it. I've also had Williams, that's ticker WMB, which is kind of nice. I have Kinder Morgan, which is KMI. There's several others. They've all been big winners over the past couple of years. Share prices have gone up. Dividend distributions have also come through. So, that's a little bit of history or information on this particular dividend payer that I own. In August, I got paid $1,000 because I own these shares, and over the course of the year, it'll pay me $4,000, which is just great. I didn't have to do any work at all for that. The distribution comes out at a lower tax rate than I would if I had a W-2 job. So because I've put all the effort into purchasing the shares over time, I've turned my W-2 job into investment income. And now the investment income is much more tax friendly to me. The dollars are more efficient now that I put the work into buying the shares. And as they pay out to me over the many years, I'll be in a lower tax rate, even though the income stays high enough to pay all my debt, or not my debt, but my expenses. So there you go. Hopefully you enjoyed this video. Check out ticker AM, Antero Midstream. Hopefully it will continue to grow. If not, it's still a 5% paying dividend yielding thing, or stock. And sometimes some of the distributions come out as kind of non-dividend distribution, somewhat like return on capital, and so you get a better tax rate on it. So like, subscribe, give me a thumbs up. Appreciate any activity on the channel, and we'll see you in the next one.